Did you receive the employee retention credit when the IRS reversed it and now they want the money back? Here's a question from Jonathan. He says, we applied for the ERC and got $150,000. Fast forward 3 years later, and the IRS says we have to pay it back. How can they do this? What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy-KIng. If the IRS took your check, the Levy-KIng will get it back. 1-877-LEVY-KING, levyking.com. Today, we're walking through exactly what happens when the IRS reverses your employee retention credit. We need to talk about the specific notices, why the balances are so big, and why ignoring this is the absolute worst move you can possibly make. First, let's look at what actually happens in the system. When the IRS reverses your employee retention credit, you'll probably receive something called a recaption letter, or a notice 6577C, stating that the ERC was paid to you in error, but you now have as few as 20 to 21 days to pay it back. But here's what happens behind the scenes. The IRS actually goes back into your company's payroll tax history, and they literally remove the credit that they already paid to you. Suddenly, a quarter that you thought was paid in full now shows a massive balance due. To the IRS computer, this now looks like you simply never paid your payroll taxes for that quarter. And then the problems begin. If that's not bad enough, it actually gets worse. You might assume interest starts accruing from the day you got the reversal letter, but it doesn't. The IRS actually treats this debt as if it has been overdue since the day they issued you the refund check 2-3 years ago. That means interest has been compounding daily for years before you even knew that there was a problem. But it gets even worse because of the penalties. Since the system views this as an unpaid payroll tax, it adds on penalties. They're going to charge you a failure to pay penalty, which can add up every single month, and a failure to deposit penalty. This one is the heavy hitter because the deposit was technically due years ago. This penalty can really max out fast. And then finally, since the debt is considered an unpaid payroll tax liability, which is the IRS's highest enforcement priority, the automated system is going to move it to collection, which leads to a final notice of intent to levy. That means they can literally seize your business bank account or garnish your accounts receivable to satisfy that old tax debt. The best advice I would give is this. You need to take action immediately because payroll tax problems can get out of hand very quickly. Before you panic, you need to understand your options to either appeal the reversal or contain the damage. Click the link in the description or visit levyking.com. Let's get this resolved so you can get back to business.
1-877-LEVY